What's going on, everybody? You know who it is. This is Austin, and this is the Austin Smith Real Estate Podcast, where we talk about real estate and we talk about lifestyle. Today's guest, me and him are actually getting a single-family rehab started, and one of the things that I kind of wanted to tap into his insight was on the funding side. So, sometimes we might be concerned with how we're going to raise the money for the project. And, today's guest kind of pulls back the curtain a little bit on how you can kind of analyze your deals to see how much, either money that you need out of pocket or what you need to do in order to get the deal funded if you don't have any money out of pocket. And this current deal, no money, for me at least, the current deal that we're going to be starting the rehab hopefully shortly, no money out of my own pocket. So assuming that everything goes well, I'll be able to tell you firsthand that yes, no money deals do exist. A little bit of housekeeping. Oh, and the only other thing that I want to tap into his expertise, or at least, why I brought him onto the show, he invests out of state. You'll even have an opportunity how he has some investment projects going on down in Texas. You'll also hear how he also had projects or first got started in Antigua in real estate investing, which was amazing to hear. So, a little bit of housekeeping before we get started. If you or anyone that you know has benefited by listening to the Austin Smith Real Estate Podcast, please log on to iTunes, leave me a rating and review. Let's continue to share this message. And if you know anyone that can benefit by coming onto the podcast, please let me know. Guy, gal, does not matter, as we continue to share the sugar. Without further ado, let's get into the show. What's going on, everybody? Thanks for tuning into the show. Today we have an awesome guest, one of the individuals that I'm currently working with, and I had to bring him on to the podcast. He's the current principal of Garden State Redevelopment Partners, which is New Jersey. Actually, I can't even say New Jersey, but it is his particular investment company that they are producing a lot of transactions throughout New Jersey, Texas, and he'll even get a chance to tell you about how he got his start investing in Anguilla, which, talk about out-of-state investing. The main reason why I wanted to bring this individual on is because with the most kind of recent transaction that we're doing, the financing that he was able to provide, or at least connect me with, was particularly better than what I've been seeing from, kind of the other lenders that I've dealt with, or, the hard money lenders and guys that are out there. So I wanted to make this show about, one, funding your deals. Individuals, if you are gotten over the first hurdle of actually finding a deal, you got to find out how to put it together. And that's what I kind of want to talk about on this show, as well as house flipping and investing out of state. So without further ado, ladies and gentlemen, I welcome to the show Tom McInerney. Tom, thank you for taking the time to come on the show, bro.
Hey, Austin, how you doing?
Not bad at all, man. So let's jump into this. Tell us how you got started in real estate. What were you kind of doing before? What made you, want to make this switch? How did you make this switch? Tell us how you got started.
So I got started working for my dad. I started working for him in college and worked for him through my senior year during the school year, and had sort of ingrained myself. And he always wanted me to work for someone else for 2 years after I graduated, but I sort of ingrained myself in the operation enough that I almost forced him to give me a job. And that was how I got started in Anguilla, because what we did was we built 2 boutique hotels in Anguilla, smaller hotels. They were sort of villas that were designed. Some of them were designed for sale, and others were designed to be kept as rentals. And that was a big learning experience for me because that was pre 2008 when we were planning that, and then we decided, planning the second one. The first one we built in the early 2000s and it was up and running before the crash. And the second one we had designed before the crash, luckily didn't start, but then afterwards had to really sharpen our pencils and come up with a creative strategy that would work in that new environment. So, that was a great learning experience for me. I learned a lot, and, it was some experience that I wouldn't trade for anything.
Now,
so, yeah, that's how I got started.
Now, were you were you staying in Anguilla, or were you still, were you still in the States and just operating in Anguilla?
Yeah. So, luckily enough, I got to stay down there for periods of time. Usually the longest I lived down there was for about 9 months. After that, I would go back and forth sometimes with intermittent trips of a month, 2 months long, usually during the winter, which is great. Cause that's the high season there. But yeah, so I was staying down there and, I would, after the first year or two, I would make, trips back and forth.
Interesting. Okay, because, and like I was saying about the theme of the show and just talking about like investing out of state and, finding different markets to invest in if people feel like New Jersey is too expensive, which it's not and still has more than enough opportunities. But some individuals that maybe went away for college and are familiar with another market, how they can start to break into that market as well. Because you're also doing things in Texas as well, correct? Can you kind of talk about that real quick?
Yeah, so the company I work for is based out of Texas. It was started in Texas around 4 years ago, and they now own, in Texas, we own, I think it's 750 units or more, about 70 million in assets. So what we're doing now is we're trying to replicate that in Jersey. For the last 18 months, we've been buying small, 1 to 6 unit buildings, fixing them up and either renting them out or selling them. So, yeah, I'm not as actively involved in the Texas things. I kind of run the show in Jersey. But yeah, it's interesting to look between the two states and see the different nuances. There's different things that come into play on the investing side, on the rental side. Texas is an extremely landlord-favoring state, whereas Jersey is maybe the most tenant-favoring state. Texas has a much shorter foreclosure period. Jersey has the longest foreclosure period in the country, which is important if you're lending. So, there's definitely things that come into play that people should be aware of if they're looking at other markets.
Love that. And it's funny because now, my new wife, I say new wife, but we just got married essentially.
Congratulations.
And I appreciate that. And
in Paris, man, you're making us all look bad. That's pretty good.
No. I'm following the blueprint. And one of the states that we've talked about living in the future was Texas. And now that, I just got off the phone, before we jumped on this podcast talking to my coach, and we were also talking about Texas. And now you're kind of talking about Texas, and it's making me feel some type of way, but we'll talk about that at another time.
Well, there's a massive migration south, that's a huge trend in real estate in general and has been for, I would assume, at least 15 years because, the taxes in the Northeast and the cost of living is so much higher. So I think that people, if they retire in particular, are saying they're looking around and going, why should I pay this much money just to live in, New Jersey, Pennsylvania, Connecticut, New York? When they can move to Georgia, they can move to Texas, they can move to North Carolina. And one, the cost of living is lower. Two, for some reason, they're able to build for cheaper. So a lot of the homes are cheaper, as well as the land costs. And then three, the taxes are so much lower. So that's a pretty significant trend that's gone on in real estate for the last decade plus.
Right. Yeah. It's interesting that you say that because and I feel like I've seen that from like the millennial wave as well. Like they're moving into, these cities that maybe weren't, where it is now 10 years ago. And they're starting like that heavy migration towards. And yeah, it's pretty interesting. I'm going to continue to look at it, like into it now that you mentioned it. So, okay. Now you've obviously have experience with, investing in different states. How are you finding these deals? Like, do you have a particular go-to strategy to finding these deals, or what do you like to do to find these deals?
Yeah, I mean, that's like the ultimate question, really, because finding the deals is definitely the hardest part. Well, no, actually, I would say it depends what stage you're at in your real estate career, because getting the funding is the hardest part. But then once you get the funding squared away, then you're kind of back to square one. You're just like everyone else. How do you find more deals? Right. And that's the hard part. That still remains a challenge for me. I think that remains a challenge for pretty much everyone in real estate, particularly at this point in the real estate cycle, which, if your listeners are familiar, they know what I'm talking about. But if they're not, people should Google that and look into that. The real estate is very cyclical. So, like in 2009, after the market collapsed, and then for a few years after that, it was very easy to find deals because no one had money and values were down, and, people were down on real estate in general. But now the market's very hot, and it's very difficult to find deals. So I don't have a magic wand. I think a lot of real estate comes down to just being a doer and sort of not taking no for an answer and just beating on every door until, one of them opens for you. So I think that, you have to network a lot, which is something that I don't particularly like, and I don't think a lot of people particularly like, but that's just the nature of real estate. So you have to just be hunting. You have to look all the time. You can look on market. You can look with wholesalers. Probably the ultimate thing to do would be to find a market that you are confident in the future of and less people know about it, because once word gets out, then obviously it's harder to find deals. So like we started investing in East Orange probably 18 months ago. And people told us we were late then, but I would say in the last 8 to 12, or probably 6 to 8 months, call it, the market's gotten really saturated and it's much harder to find deals. But that little time period where we were early there, at least from our point of view, we were able to buy probably 35 apartments in that point in time. So
35
that's
apartments.
The best. Yeah, and that's probably in East Orange and Orange. That's probably the best thing you could do is be early to a market, because then there'll be a plethora of deals. But if you're late, I don't know, it's tough. You just have to hustle.
What if somebody, like for example, I've also thought about Baltimore as an investment opportunity. It has its sections for sure. And I was talking to one investor, and she's like, "Yeah, you can pick properties up for $20,000," and I'm like, "Yeah, but I might not get my money back after that." Like that, you know what I mean? Like that might be it.
Like Omar and crew in those properties.
Like that might be it. And so I've been looking in, Baltimore over by like Morgan State University. And, the question is like, what do you suggest if somebody was thinking about exploring another market? What are some of the things that, some of the actions that they can take to identify whether that particular market or area is good for an investment opportunity?
Yeah, that's a good question. I mean, I would say that the best thing that you can do is sort of be adjacent to, to the places that are, I don't know if this is a PC word anymore or what, but gentrification. So if you know that there's a hot area, and this happens in cities all the time, like, in Philly, for example, it could be, Northern Liberties was really, going crazy like 10 years ago, and it's moved north to Kensington now, which is an area, even 10 years ago, people would have said you'd be insane to buy a house in. But, so I think that and this is really simple. It's just a matter of, if you can position yourself sort of adjacent to where the current gentrification is happening, then I think that it's not necessarily just a matter of time, but, if other factors are held constant, then, that those values should increase. I would say, like, if you're next to a hot market, then in all likelihood, at some point in time, that those values, the increase in values will spread to where you are. Now, I'd say there's other things you can look for too. Transportation is always huge. So if you can be near a train line, which is driving like an enormous amount of the growth in East Orange and North Jersey in general, if you can be near transportation, that's big. other things, school's a good thing. It doesn't necessarily mean that an area is going to turn, but it's definitely a positive. Other large institutions are good, I would say. If you have, big employers in the area, that's always a plus. Really employment is what drives real estate values overall.
Right.
So if you can stick to places where there are large employers or where employers are moving, that's big. So yeah, I don't know. That's a lot. I don't know if that answers your question.
No, it does.
It
does, because there's a lot of, yeah. I mean, you kind of touched on, I want to say virtually all, right? Because I mean, location, 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 and out of each and every aspect that you just mentioned is pretty much the main indicator of real estate values. You know what I'm saying?
Mm-hmm. And there's small things, like people would say if there's a grocery store that goes into the area, that could be a sign of change. So there's other small indicators as well.
Little hacks, it seems.
Yeah, little things like that, or if there's like the hipster coffee shop or something. So yeah, I would say that if you're looking at all those things and you can check off a couple of boxes where you get a couple of those factors, you're probably never going to get all of them, because if that's the case, then the area's probably already come up. So but if you can have transportation and you're kind of next to the hot area, I mean, for me, that would be enough.
Let's talk about, because you're on the rehabbing side, and then I want to cover, funding. But a lot of people say that they want to flip because they want to make the bigger profits. No problem, but kind of give them what a kind of day in the life as a rehabber is, or kind of give me an idea of what your month looks like, and just for individuals to really understand, okay, if it is, if that is their investment strategy or choice, here's what that comes with.
Yeah, I mean, it's not easy, to be honest with you. It's really challenging, because I would say flipping in and of itself is a pretty challenging business model. That's not to discourage people from getting into it, but, it's just, especially, again, I'm going to mention the real estate cycle. We're a little bit later in the cycle, and people, I mean, who knows when it will go to a down cycle, but, values are high, spreads are tighter, and, it's just more competitive to get deals. So what that ultimately means is there's less room for error when you're doing a rehab project. So, if we were buying projects 5 years ago, then, prices would be down, and you open it and, there's bad electric or there's bad plumbing. All right, it's not such a big deal because I got it for so cheap, I can spend an extra $10K. But when things are really tight and competitive, it can be very difficult to make money on a flip, and you have to be really careful. So the one thing I would say is get a good construction team, because that can be the downfall of anyone in real estate, or any individual real estate project even, is that if you have a bad construction guy, or if you have someone that, you don't trust or can't do competent work, it's probably going to cost you more money in the long run. And that was a big struggle for me up here, was finding the right construction team. We now have that. You've met him, Diego. He's excellent. But until we got there, it was it was really challenging, I would say, because I think GCs have a reputation for this. They can be difficult to deal with. They can lack professionalism. They can, not show up on time, and that can really kill a real estate project. So that's a really hard thing, getting construction right. Number two would be, I would say you have to be realistic about what your goals are for a project, because it's really easy when you're getting into flipping to look at a project and say, oh, it'll work if I only spend $50K on construction. If you're hoping and wishing for that, you're probably setting yourself up for failure. You should find out what a realistic estimate is for construction, and then find out if your numbers work from that. Don't try to work magic with your pro forma, because, it's not going to play out that way in reality, and it'll ultimately cost you.
What would you say?
So, I mean, I don't know. I don't know if that answers your question, but that's just some advice I would give to flippers.
No, for sure. And that's because that's the operation portion of it, right? And I think each biz or each which we'll touch upon later, like each rehab business has kind of like 4 departments where it's acquisitions, there's funding, there's, the rehab or, the renovation department, and then you have like your sales slash closing, kind of department essentially. And, like you mentioned, like the construction part is the most important operation because obviously speed, in this particular case, speed is indicative of how much profit that you're going to make. I mean, you're incurring expenses by the minute, you know what I mean? And the only time, like as far as any business, like you're in business and the way that you make money is by 2 ways: either increase the sale price or increase profits, or decrease the expenses. And usually, when it comes down to real estate, you're locked in at a certain, after repair value. So like, you might, unless the market's booming and it goes up, from your original analysis, but you're pretty much locked in on the profit part. And you really have to have the opportunity to, to manage the expenses. And, even 2 weeks or 3 weeks or even like obviously another month onto the project can add thousands of dollars, in unexpected expenses that can just eat up into your profit margin. What would you say is like, an average profit per flip? And like your basic flip, not like your apartment buildings or anything like that, but your single family flips. Where what are the average profits that you're seeing?
Yeah, I mean, it depends what market you're in. So we would typically look for about a 30% delta between the ARV and what our cost basis is going to be. And your cost basis is, your acquisition, your construction, your insurance, taxes, interest, everything that goes onto the balance sheet of a particular project. So we would look for about a 30% delta. We might take a 25% delta, but if you're looking in Philly, there's almost like a built-in profit margin of around 18 to 20% because that's a super tight market. It's really competitive. There's a lot of eyes on every deal. So that's what I mean, where the margins get thin and then it gets a little bit tougher to make money in the flip game. So, like I would say that for a typical investor, if you had maybe a 25% difference between your ARV and your cost basis, that would be pretty good. It's tough to find that, honestly, in these SARMs these days. So,
and when you say, and just for the listeners, when you say a 30% delta, which obviously is the difference, but the 30% delta between the ARV and the cost basis, can you kind of touch on what you mean by that?
Yeah, so if it was going to cost me $100,000 to do a flip, like to buy it, do construction, all those other costs I mentioned, then I'd want to be able to sell it for around $130,000.
Gotcha. So, okay, so you're taking your all-in number, and, okay, so you're talking 30% profit margin on top of your all-in, which is the cost basis. All the holding costs, all the financing costs, everything, your all-in number, you want to see a 30% essentially return on that investment.
Yeah, and, keep in mind that because you're going to have closing costs when you sell the property too. So I typically pro forma around 8% closing costs. So if I have $130,000 sale, then 8% of that is going to agents, it's going to title, it's going to my lawyer, so that's why I shoot for 30%, because then at the end of the day, you might be left with a little over 20% after closing costs.
Okay, gotcha. Okay, awesome. Let's talk about funding. As that was an excellent segue into it. So, a lot of people, and even including investors, and eventually, sometimes they get into a jam where they need to find funding. They need to find out how to put this deal together. What are some of the ways that you're funding your particular deals? I know your company does a little bit of funding on the side. How can, if I'm a new investor, I have some money, but not a ton of money at all. I just have maybe, let's say a couple of $1,000s to play with. But I've read the books. I've listened to the podcast. I know I don't have to have all the money. I know that there's a way that if I have a good deal, it can definitely get funded. What are some of the ways that individuals can get their deals funded that either you've seen or that your company helps do?
Yeah, I mean, I think that's a great question. I really like the way you put that too, because if you find a great deal and you have the right mindset, you can get it funded. So what I mean by that is you kind of need a couple things figured out. So if you only have a couple $1,000, there's things that are going against you in that instance. One, it's going to be tough for you to get a hard money loan. Two, you don't have the equity to do the project. But the thing that's going for you is a good deal is a golden ticket. So if you hustle and do the work and you find a good deal, what you need is you basically need someone with a lot of experience who has the capital, who can get a loan and you trust. Because then you could probably talk. What I would recommend is you try to find someone like that and you try to partner with them on a deal where you are putting up, whatever amount of money you have. If it's $5,000, if it's $10,000, you're doing a lot of the work, which, quote unquote, sweat equity. And, and then that person can use their money and can use their ability to borrow to really fund the deal. And if this is your first go round, it's going to really benefit you to work with someone who has experience, because there's a lot of stuff that can, quote unquote, sink the ship in real estate. And if you don't know what you're doing, I would strongly recommend that you work with someone who's done a handful of flips before. So and I would say just along those lines, don't be greedy. Work with someone that you trust. Don't expect some outsized return. Typically money talks. So if you only can provide 10% of the equity, I would take only 10% of the proceeds in that instance just to work with an experienced person. So, that would be my general recommendation, would be to find someone that you trust, that you can work with, and to not get greedy and give up. If you can fairly split up a deal with someone, I would take it. I wouldn't try to get an outsized portion of a deal in that case.
It's so interesting you said it, because even when it comes down to business, you can have 20% of something or 30% of something or 0% of nothing. And you have to pick one, especially, when you're bringing somebody. There's a reason why you had to ask for help. And if you did, and if that was the case, then obviously you're going to have to pay for help. But I think one of the things that I've learned, or one of the things that I've started to put to use over the past year, was partners. And, just building with my own, internal network, that if I needed access to funding or access to money, I have a few individuals that I can call. And obviously now from the current deal that we're getting ready to do, it just adds another entity to that pot. And, what you lack, somebody else has an abundance of, and vice versa. And even the individuals that, in your example, the individual that has the experience, maybe he's had a 20 to 25 year run and he doesn't want to be in the day-to-day operations of flipping or, during the rehab. He wants to be, on the beach with his family. He's done his job. He lends you the money and he just wants the cut check. You know what I mean? The check cut at the end of the transaction. And you, on the other hand, you need the money. You're willing to put in the sweat equity. And then when it comes down to it, whatever's fair, if it is 1090, if it is 80/20, whatever's fair, at least it closes the deal. And more importantly, you've now gained more capital, more experience, and now you can work your way up to the point where you can start commanding a bigger slice of the pie, but only when your value is indicative of that. And if it's reciprocated in that, then yes, you deserve that. But working with partners is one of the easiest ways to at least gain access to the money. It's just the fact that you're going to have to be okay with taking a smaller slice of the pie, especially if you don't have any, especially if you're not bringing much to the table. So yes, I totally agree with that.
Yeah, no, I mean, I think that's spot on. I always say, don't fight for a bigger piece of the pie. Let's make the pie bigger. It's very short-sighted, and especially if you don't have money, then the truth is, just to be straightforward, you don't really have much of a leg to stand on. And if you haven't done any deals, you're not going to going to be tough for people to. There are lenders who lend to first-time investors, but it's much easier if you have a track record. So don't be greedy. Find a trusted partner with good experience. Don't just, be careful on that, because you're vetting that person at that point in time. If you find a deal, then you have value. You're bringing value to that transaction. So you have to make sure the person you're partnering with is trustworthy as well. So, do your homework on that side, but don't be greedy on the split. Get a couple deals under your belt, then do one by yourself, and then, then you're kind of off and running. And, if you do enough deals, then you can get people to invest in them, as actual sort of, what we call LP investors or limited partner investors. You're running the show, they're just the investor. But you need to get a couple under your belt before you're even thinking about that. So, I think you're exactly right. Partnering is a net benefit in this business, and you should definitely be looking for good people to do that with.
Awesome. So and as we kind of start our descent here, we've kind of talked about finding deals, and just as a recap, we've talked about analyzing markets, right? Like where to invest. We've talked about that. We've talked about, finding deals where a lot of people, just don't take enough action. They take the right action, just not enough, because, out of all the people that are looking to sell their homes, 5 to 10 to maybe 15% of them are only looking to sell at a deep, deep discount where it becomes a worthy opportunity. So not only are you looking for individuals that are selling, you're only looking for 15% of the entire population that's looking to sell, in which you can get, an amazing deal on. So that just puts things into perspective of how hard you're going to have to work to find these deals. Some people use direct mail, where they're mailing homeowners and saying that they want to buy their homes. Some people are door knocking. Some people are, like you said, networking with other investors. There's a plethora of ways, but one thing that I can find that is consistent is the networking piece, and just basically telling everybody in your circle or everybody that you come in contact with that you're an investor, you are looking to do deals. And, either a deal is going to come your way, or in my case, like in your case, a new funding partner comes into your way. But another piece of the puzzle kind of comes the more that you put it out there in the universe that this is what you do. So we talked about finding deals. We've talked about funding deals. As far as the analysis, I think I might have to do a YouTube video on that, because analysis is hard for, to listen to the numbers being broken down and not being able to see it visually. But we talk about funding. Now, how do we, if somebody wants to turn this into a business, right? Because I truly believe that real estate is a lifestyle business, and it's one of those businesses that you can structure your lifestyle around, and it can kind of fund your dreams, essentially. For someone who, I'll give a hypothetical goal of someone who's like, I just want to make, $100,000 and have flexibility as all hell, which to a certain extent, flipping can give you that. If real estate agents were bringing you deals to your table left and right, then okay, you don't have to go out and search for deals. If you had that relationship with a contractor that he knows how you work, he knows how you like to get deals done, things like that, okay, cool. You might not have to do as much managing. And then obviously if you have an agent that can help you sell it, you don't have to worry about, much of the hands-on work. Like, you can make this extremely flexible. For someone whose goal that is, what would you say they need to do, or what elements do they have to have in place to run a successful rehab business?
I mean, I would say that I think that you're right that it's possible to have a very relaxed lifestyle. I think that in order to earn the relaxed part of your lifestyle in real estate, you have to work like crazy the rest of the time. So, listen, when you get to scale and you get really big and you have, a couple hundred apartments that you own, then you can be the guy on the beach just, writing the check or collecting the check. But, I think that for the most part, especially if you want to start a serious business in real estate, you have to be ready to do an enormous amount of hard work, which is something that, as you were saying, the networking thing, I was thinking, like, I don't know anyone who's successful in real estate who doesn't network all the time. Or I don't know anyone who's successful in real estate who isn't just a doer, who goes out and works hard and gets things done. So it's like, if you're willing to do that for when you're on the clock, if you're willing to do those sorts of things, then yeah, you get flexibility and you can go on vacation and you work for yourself, and that's great. That's one of my favorite parts of this business. So, but I think that if we're being realistic about it, it takes working like a crazy person the rest of the time, and you have to love that, I think, because you'll get burnt out if that's not the case. And it is fun. It's an entrepreneurial endeavor, and I enjoy it, and I think you have to be able to enjoy it in order to get to that place where you have the freedom, where you can go on a trip or where you can be relaxed. So, but then to the actual business of what's important, you have to, on the acquisition side, you have to build a network of people where you can get deals that meet your criteria. So that's going to take networking. It's going to take going to meetups. It's going to take, taking 10 meetings for one of them to be productive. On the construction side, it's going to take probably going through a handful of contractors and GCs before you find, quote unquote, your guys. And then on the sales side is probably the easiest side to figure out, because
right.
You can just list it yourself, or you can, list it. If you're in a seller's market, that's no problem. You want to find someone who's, who knows what they're doing. Like some agents aren't really as well versed in things as you are. So you want to find someone who understands the market, understands how deals go, and can get you top dollar when you sell. So I would say that those things are important to setting up an actual business. And again, I can't emphasize enough that it's about getting deals, and then it's about executing on construction. So those would be the two most important parts to me.
Awesome. And then last question, kind of before we go into the core four, just to give the audience something that they can take away actionable. Last quarter of 2018, 2019 is upon us. Goals are being set. People are having that esoteric vision of how 2019 is going to go. For someone who's just starting out and maybe they just want to go out and flip 1 or 2 homes next year, that's it, just to get their feet wet. They're maybe working a full-time job and they just want to do this on the side just to make some extra money. What can they do throughout the rest of 2018 going into 2019? What can they do that can set them up or put them on the right track?
That's a good question. So just on a completely actionable answer, I would say network. You should go to like meetups and things like that. Like, I don't know if you've ever been, I think there's an app actually called Meetup, but, go to those, Google wholesalers, because, you can find the people who are kind of like the movers and shakers. If you go to those things, if you find wholesalers, and like I said, be willing to take 10 meetings for one of them to be productive. So I think that you just have to start by finding deals, and that involves networking. So I would say make that your first goal.
Awesome. And I tell everybody all the time, if you're not, a super connector and you're more of an introvert and, you don't like the sound of networking, fine. But just put it out there that you are an investor, that you buy homes. If you know anyone that's looking to sell, let me know. Just start with that. Whether that's family, whether that's friends, whether you're just posting that on social media, but just do it and do it on a 10x level. That's going to be the only difference. And eventually something's going to give. Either people are going to start, telling you, hey, listen, I know my aunt was looking to sell, and then you start going on appointments, and then, they might not all be in the worst condition, but as people, keep telling you or keep letting you know this person's looking to sell, eventually you're going to come across the property that's extremely distressed. And it's all about just playing the numbers, but, just putting it out there. You don't have to, don't feel like you have to, do X, Y, and Z just do step A of just letting everybody know that you're buying homes, that you are an investor. Like, just start with that. And then it seems like once you get your first deal, like I don't want to say the floodgates open, but the opportunities, it doesn't feel no more, it's no longer a place of, great beyond. Like, you don't have to worry about trying to bridge the gap mentally between having not done your first deal yet and then doing your first deal. You can kind of get rid of those limiting beliefs and then just try to find out ways that you can further promote your business. And that's when you start to get into, full operation and then growth mode. So awesome. Okay, let's wrap this up. Let's jump into the core four, which are the four questions that I ask each and every guest on the Austin Smith Real Estate Podcast. Question number one: what is your favorite aspect about real estate?
For me, I like the fact that it's, people say it's the one less inefficient market in the world. Like the stock market, people say operates like with perfect efficiency. Real estate, you can still find deals. So, and what I mean by that is, everyone knows what Apple stock trades at. You're not going to get someone who sells you one share of Apple stock for 20% less than it should be. In real estate, you can still make that happen. And if you find a good deal, it in theory, lasts forever. You could just hold the house for, 30 years and then you have a nice asset on your balance sheet. So I like that you can find inefficiencies and you can, you can make money that way. So that's probably my favorite part.
Awesome. Question number 2. What is your favorite business or personal development book?
I would say, I don't know if it's my favorite, but the one that comes to mind, it's called Execution. It's by, let me actually Google this. I forget the author.
Execution.
Yeah, it's by this guy. He worked for Jack Welch. He ran one of GE's companies. What's his name? Yeah. Larry Bossidy. He's like a relatively famous CEO. I just really like his approach to business, because he says, and it sort of goes along with what we've been talking about. He says a lot of companies fail because they get caught up in strategy, and there's this big disconnect between strategy and what actually goes on the ground. So whenever you make a plan, you want to take it down to ground level and make it so that, all right, so I'm going to do 3 deals this year. That's my overall plan. Okay, so how do I do those deals? Okay, step 1 is going to 3 networking events a week. And then you go to the 3 networking events a week. And, you might have other goals associated with that too. I want to meet 10 wholesalers in the next month. So you actually take your overall strategy plans and take them down to a ground level where they're actionable items. And I just think that's one of the most important lessons in all of business that you can learn. So I really like that book.
Love it. Love that one. I'm going to write that recommendation down. Awesome. Number 3, when you're not out slinging real estate, when you're not out building hotels out in Anguilla, when you're not out continuing to redevelop Texas, so by the time that I get down there, it's expensive as hell. Besides that, what do you like to do in your spare time? What fun things do you like to do in your spare time?
I'm pretty boring, so I like Netflix documentaries. I like to read. And then if I go out, I like to get dinner with my friends. I used to like to go out to bars and clubs and stuff like that, but those days are kind of gone for me. So I just like getting dinner with friends. I like stand-up comedy. I like live music. So yeah, that's pretty much it.
Awesome. And the last question, Tom, where can people find you at? If they have a deal that they want to, submit to you, if they have, a deal that maybe needs funding, where can people find you at?
They can email me. My email is tom@gsrpartners.com. So it's Garden State Redevelopment Partners, but just gsrpartners.com.
Awesome. I'm trying to think if we covered everything. I mean, we got a good chance of covering a lot, obviously from an individual, and thank you for allowing us to tap into the expertise, considering the fact that you're getting projects started, throughout the country. Well, actually, throughout the world now. Jesus. Are you still in Anguilla now, like still, or is that was that development done and everything's moved on from there?
I mean, I'm not involved in the day-to-day anymore. It's my dad, so, like we bounce ideas off each other all the time. There's still, so that second project I was telling you about, they're still doing phase 2 of it, so that'll probably be another 8 villas that they'll build. So I'm not involved in the day-to-day, but, I certainly look at the pro formas and, give some input on it.
Are these villas for sale or are they like luxury rental, like vacation rentals?
Yeah, our model was to sell half and keep half. So we operate the whole property as a hotel. So, 20% of the buyers could remove their units from the rental pool, but for the most part, when people buy a house down there, they want to rent it out and generate some positive cash flow.
Right.
So our internal model was to sell half the villas and keep half of them, because that way we capitalize our investment, we take out our equity, and then we're making cash flow long term.
Awesome. Well, if I'm ever in Anguilla, then I know which place to rent. So hopefully that's sooner rather than later. That'll be awesome.
Yeah, man. Let me know.
I'll come on down. I don't even know where Anguilla is on the map, but I can find it somehow. Awesome.
It's worth it. It's awesome.
Well, it's tropical, so I love tropical. So I love white sand and blue waters. So that'll make me really happy, especially in the winter months here.
Yeah, exactly.
Tom, I appreciate you taking the time to come out on the show. You gave us some gold to work with. You gave us some actionable steps that we can go out and go do right away. Hopefully the listeners take some words of advice, even if it's just one thing that they can implement right away that'll turn either their business around or their mindset around. They definitely have that opportunity. Tom, thank you so much for coming on the show, brother.
All right, Austin. Thank you.
Enjoy.